Well, welcome everybody to our 84th annual meeting. Can you believe that? I'm Doug Gaff. I'm the chair of the board of directors. On behalf of the board of directors, welcome to this meeting, and on behalf of your credit union staff, wonderful staff that serves you every day. I'm glad you're able to join us here. We're hosting this meeting from the UNR's Innovation Center, taking advantage of their technology and hospitality. Thank you for joining this meeting. We had hoped that by now, things have been settled down, that we wouldn't have to do this electronic meeting. I miss meeting everybody in person and seeing everybody in person, but of course that didn't happen yet, so this is the next best thing. I hope you get something out of this meeting. And maybe we'll be able to do this in person next year. As chairman, I have to say we had a pretty good year last year, as you can see from the annual report that Katie talked about. Our credit union is growing in a very healthy manner, growing faster than our peers. We're better capitalized than our peers, and interestingly, an institution that actively seeks to find those areas where we can serve better. We're not just trying to survive. This year, we absorbed the warnings for financial institutions as the full impact of COVID pandemic came in focus in the second half of the first quarter. Worst case scenarios, fortunately, have not so far come to pass. A combination perhaps of our robust communities and the credit union's conservative stance. I'd like to make a couple more observations. We're proud to have been able to jump in and perform nearly 30 of the emergency PPP loans through the SBA. And we passed 10,000 members, which is a huge milestone. Add extra digit on there. Sierra has never concentrated on growth for its own sake, but this is recognition for a great reputation. It's credit to all of our credit union staff. I'll leave the rest to our treasurer, Don Ross, and our CEO, Jim Hunting, and supervisory chair, Curtis Bradbooth. They'll have some comments on our annual audit. Then we can dive into any questions or comments you might have. And thanks for tuning in again. And I'll turn it over to Katie. Are you going to do your presentation?
We're doing it, yeah.
Okay, it's going to be a wonderful presentation that Katie put together. Kind of summarizes a lot.
84 years ago, in the waning years of the Great Depression, a small group of Sierra Pacific Power Company employees took it upon themselves to create the financial partner they needed to help face whatever the future held. Could those founders have imagined the monumental changes that were to come? Could they have foreseen the impact of a second world war or the national fervor of the moon landing still over 30 years away? Could they have anticipated the introduction of the World Wide Web, the mass production of electric vehicles, or the e-commerce phenomenon? Our founders may not have known the shape of every challenge and triumph that was in store for them, for their families and neighbors, but they saw the need for a credit union who would be right there with them through it all. The groundwork laid back in 1936 still serves as a strong foundation for the work we do today. If 2020 has taught us anything, it is that the future is impossible to predict, but not impossible to prepare for. The work that the Sierra Pacific team did in 2019 was not designed to see us through a pandemic. As you planned weddings, retirements, visited colleges, and booked vacations, we were passionately pursuing the vision of bringing Sierra's best to every member, no matter how far from a branch. With that vision in mind, we introduced online loan and membership applications in January of 2019. This year, in shutdown social distancing, Sierra staff have been able to welcome over 700 new members and open over 1,100 loans while minimizing branch visits. We launched our mortgage loan program in June of 2019 amid soaring housing costs and dropping rates to make home ownership more affordable, and less stressful for our members. This program has helped us do just that. Already this year, we've helped members finance or refinance over $6 million in mortgage loans. In December, we launched the Alumni Credit Card in partnership with the Nevada Alumni Association. Since then, Sierra's members have been able to transfer balances from high-interest cards to this alumni card, saving money and supporting the Nevada Alumni Association scholarships and programs. New tools and technology have improved account access, kept Sierra's costs competitive for every member, and empowered staff to dedicate more time to helping members through financial challenges and opportunities. This year, our team is focused on providing lifelines for those members who need them, PPP loans for small businesses, payment flexibility for newly unemployed or furloughed workers, and as always, one-on-one help to find ways for each member to make it through. In 2019, these updates meant a year of solid growth for the credit union. Total assets grew from $125 million in 2018 to $131.7 million at the end of 2019. This essential measure of credit union health has continued to grow through 2020, reaching $148 million in August. In 2019, Sierra provided $44 million in member loans, a 7.6% increase over the year before. Total loan balances increased to $78.1 million from $71.6 million, an increase of 9.1%, nearly double the national average. This summer, we passed the milestone of $80 million in member loans and have continued to grow from there. Membership in 2019 grew from 9,200 to 9,600, and this summer we reached and passed a total membership of 10,000 strong. In addition to the family and friends you refer to Sierra, we've been pleased to welcome new members who find us through your online reviews. More than ever before, the stories you share are making a difference for neighbors in need of a better financial partner, a role Sierra is proud to fill. Over the years and decades, Sierra Pacific has welcomed your children, your coworkers, your classmates, and neighbors. We have been right there to celebrate your accomplishments and help you through your struggles. As 2019 ended, Sierra's oldest member was nearing his 91st year on this earth. Our youngest member, just 2 weeks old. The decades that he has witnessed will exist only as history for that little girl. None of us can know the things she will live to see. Whatever challenges and opportunities the future holds, we look forward to facing them with her and with each of you. Thank you for being on this journey with us.
I hope you enjoyed that video. Just to jump right in. I feel like, do we have time to introduce everybody here in the room?
Sure.
Yeah, let's. Katie, you want to come out maybe in front of the camera so people can see you?
Right there.
Front is that?
Katie's the one that put the video together and everything. I don't know what your exact title is.
I am the marketing specialist.
Marketing specialist.
Yes.
She's a wonderful marketing specialist for the staff of the credit union. Leslie Ransel,
Hi.
she's part of the credit union staff too. Then we have Megan Mathias, Don Ross, part of the board. Michael Barnes, part of the board. Of course, Jim Hunting. He wears two hats, part of the board and the president of the credit union. Matt Helmers, part of the board. Curtis Ratu, part of the credit union staff. Supervisor committee. And Gil Aldridge. Right. So we have here, of course, we don't have all our credit union board members here or credit union staff, but I appreciate everybody. I just thought you might want to know who's in the room. So, now I'll turn over to Don Ross, or we're going to go to Jim first.
Yeah, we're just going to, Don and I are going to kind of share this, and we have a couple slides to go run through. we just saw some, and I feel good because for those of you who watch the morning finance shows like CNBC, Zoom never goes well. There's always a dog barking in the background, or or the sound goes off. And so far here at the Innovation Center, it looks like it's going a lot cleaner. So this is, I think, for me, the first hosted Zoom meeting that I've been to. So, and there's no dog. Just a few things. We talked about some of the numbers, and then Don and I are going to go through some more numbers. Particularly, we compare ourselves a lot, and the way we've been growing, we compare ourselves a lot to other institutions, not just credit unions, but other institutions in terms of how we deliver service. Is it efficient? Do people have access to it? What the cost is? Obviously, this is an industry that's being disrupted heavily by services and by technology, and we need to see what's happening, and a lot of it is on behalf of our members, even though it's behind the scenes. So anyway, and every year we have a gentleman come in named Scott Butterfield, who does strategic planning or facilitates strategic planning for a lot of credit unions, particularly out west here. And so he gives us kind of pointers on what's happening, again, not just in the credit union world, but in the finance world. So Don, we'll just sort of dive into that.
Sure. So I'm just going to touch on a few data points and show how we compare to how 2019 compared to 2018. And it kind of dovetails with that nice video that we watched and talks about some of our growth. Our assets grew to 132 million from 125 million in 2018. Our member shares or deposits grew to 114 million, up from 108 million. And reserves grew to 17 million, up from 15.6 million. Last year, we completed nearly 44 million in loans to members, up from 41 million in 2018. On the expense side, we did add one employee, which was necessary and needed. And Sierra had more loans and investment income was higher due to higher rates during 2019. That I'm sure Jim will mention to you that has changed a little bit. But we're growing well. I think we're growing at a healthy pace. We appreciate the staff that is really responsible for all of that growth and all that they're doing. So with that, I'll turn some time over to Jim.
Okay, so we go through the numbers, and again, what we do is a lot of comparison to our peers nationally. And there's just three comments, but we can get into the comparisons, and Don and I can go back and forth when it's kind of conversational. But as many of you know, branching networks are in many ways not the future, but branches are not going away. So kind of what our model is to have branches available for people and for us to do business. But a lot of the services are delivered electronically. And as we talked about, we found that was very worthwhile when COVID hit, and even when we reduced the hours of our branches. Digital access, speed are primary to many members. You know, several years ago, remote deposits were considered new, and now a lot of busy consumers demand it. Security and ease are key and are demanded by the public, and particularly when we see security problems with very, very large companies like Target. It's incumbent upon financial institutions to be amongst the most secure of all businesses. So we have a kind of a hybrid, anywhere, anytime theme, and you can deal with people you know, but you can get what you need fast. But a couple of key ratios, and we talk about these at the board meetings pretty commonly. And one of the neat things about being a federal financial institution is the federal government produces a ton of data. So we get all this every quarter. And so for us, for instance, key ratios, net worth to total assets, and that's our safety cushion net worth. So we were at 13% versus 12% nationally. The net operating expense to average assets, our expense is considerably lower than other institutions, and we want to keep it that way. We really manage our expenses, and we try to put a lot of what we do manage to our team, keeping our team, and to technology. And operating expense to gross income, and again, that's a key ratio with which financial institutions look at constantly. Ours is obviously lower than what our peers are. And you see what our growth over time was, and that big blip in 2011 was when we merged with the Southwest Gas Credit Union. But we've kept a fairly steady pace of growing not only in assets but in members and in loans. And of course, part of the trick is balancing all that out. And last year, the asset growth was 13%, and I think the peer average was actually lower than that. But anyway, watching. Loan growth, we had 9% loan growth, which was pretty astonishing. We were part of that. We're in a great place, but also just plain loan growth of that measure. I don't think very many other financial institutions around here had that kind of loan growth, even in a pretty good year. So the peer average was just under 5% at 4.83. And I say this is what we talk about a lot at the board meetings. So it's we did something during the year, but how do we compare to everybody else? Share growth, we're just slightly above what the average is. But again, looking at the graph growth over time, it's been pretty dramatic and pretty steady. Sometimes, well, like this year, it was, what did you agree on? Very dramatic. Very dramatic. I mean, we had a lot of funds flowing, about $19 million in the first 2 quarters. You know, over the back one. I'll let you go. There we go. Membership. This is, a lot of people may not think about that, but this is people joining us, and it's important because you really have to grow. I mean, most businesses do, but in a financial institution, when you have a base of operations, you want to be able to serve more people out of that same, basic cost structure. That's what makes it efficient. And you can see with us, for those of you who are numbers people, we grew at 4.55%, and that's almost 3 times what the peer did. So if you're, sooner or later, if you're not growing, that tends to be not the best thing. So that is a sign of health. And it's important to us. We're not here just to grow, but it also benefits our members if we're going to have more automated features and more security features to be serving that to a slightly larger, but good membership, because we're also very respectful of our need to have good members. So that's pretty much, I think we covered pretty much all that, so. Supervisor.
Was it my turn already?
Yeah, I think that's.
Yeah, for the most part, the supervisory committee members are all the same. We have Keith Brown down in Las Vegas, part of the legal counsel at Southwest Gas. Elizabeth Soto's in Phoenix. She's an office manager at Southwest Gas down there as well. Chase Messamore, who's been a 2-year member. He's a senior accountant here at Indy Energy. And then last summer, Amy Martinez moved away to Tennessee, and we brought in RJ Rubius, CPA, works in our tax department. So he was brought into the supervisory committee in August of 2019. And of course, myself, I've been on the supervisory committee for 4 years now. I'm a business analyst at Indy Energy. So this year we were talking about previous years before, but this year we actually decided to vote to go ahead and go with a new auditing firm. Carroll and Associates, Jim, you can correct me if I'm wrong, has been our auditor for 9 years. Yeah, about 9 years. Did a great job. But from the supervisory committee standpoint, we thought it was good business practice to maybe look into different auditing firms who come in and provide our audits. So we went through the process. There was 4 different firms that we looked at, and we all voted to go with the firm called CLA. They're actually the largest auditing firm in the nation. They have over 650 credit unions, 120 locations nationwide, and have over 60 years experience. In our asset range, they have 150 credit unions, so that provides quite a bit of experience for our asset size. And they went ahead and did their audit this August for their what's called the agreed upon procedures audit or a supervisory audit. Last year, of course, Carroll and Associates did their opinion audit. So that being said, their audit this year for the AEP, there was a total of 4 findings that were found, all considered low risk in our opinion. We discussed these findings along with our auditor, our CPA auditor, Brian, what's his last name? Brian Wilson from CLA last month with members of management to discuss these findings, and we've already been provided a memo actually from Gil for all these findings. Like we said, we consider them all low risk. And overall, we asked management, overall, we believe that the audit went smoothly, even with everything done remotely and everything done remotely, of course, because of COVID, and kind of using their SharePoint sites to deliver all the deliverables that they're asking for. So, with that being said, that's all I have from the supervisory committee. Do you guys have any comments, questions? So open it up. Yeah. Thank you, Chris. Yeah.
So I guess I'm up. Yes, well, just a few comments that I didn't say before about one of our directions. Is we're in the middle, obviously, of a strain, particularly for small businesses with COVID, and in each of our communities, we've seen businesses that have been around for years and sometimes decades that are have been just disappearing simply because they were closed and they ran out of customers and they ran out of money. And that's very sad for all of us, sad for our communities, because that's going to cascade down. And I do have to say, Megan, for instance, when the emergency PPP loans came out, Megan stepped forward, her team, and started doing the loans. It's 1.4 million
A little over
1.4 million in the loans, and we would have done more if we had time. Excuse me, but it was important, and there were some businesses that literally said we were within a week or two of just disappearing. And you know, it's sad now that this wasn't continued in their businesses right now. That even got some of that help that are once again on the verge of disappearing because they can't open up. They have no customers, and most businesses depend on cash flow. If you have been in the restaurant business, you don't have a safe full of money in the bank. What you have is customers coming in and cash flow, and that's how you pay your employees, and that's how you pay for your supplies. And again, very sad, and I would hope that somehow we have a way of getting some of those businesses which have been successful forever back. Because the customers did just disappear. They couldn't come in. So we get a little fanatic about that. But I have to say, we did jump. We had just gotten certified to do SBA loans. And we were not only able to jump into that, but it gave us a quick start on doing SBA loans. With that, one of our moves is you have all the automated things in the world, but serving small businesses and commercial lending, which we've actually been doing for a long time, we're doing much more of it now, is really a service one-on-one business. And thinking in time, not that long ago, we were standing in back of a mechanical engineer company, our members, and they were talking about doing some things with building and expanding. And we pretty much right there, you know, figured out what we needed to do. All that hasn't come together, but that's sort of what banking used to be. And for those who have worked or who know some of the regional banks, a lot of that's left because of economics that what used to be done locally. And going out to Fallon, and you talk to the district office of U.S. Bank, they don't know where Fallon is, and they could care less. And that's not, I'm not picking on U.S. Bank just because, but that's just because of the economics. They're trying to deal with the smaller staff here in the region, and they try to put it in LA, San Francisco, Seattle, and it's not working very well for the businesses that are here. And that's where we really see ourselves stepping in, which is doing what you need to do, understanding what the business is, getting quick answers to people, and making things happen. Because a large part of our economy, we tend to think of the Teslas and all that, but a large part of our economy here and in Vegas and in Phoenix are the small and the medium-sized businesses that need services and are expanding during normal times. So that's enough of my harangue. But that's really what we see ourselves going. And Megan, do you have any?
No, I think, it doesn't take away the way that we look at, I think, extending our business lending and our commercial lending is we're really looking at it as helping the people. Yes, we want to grow the business, but it's still about those individual members that we want to help and help their business grow. And I think that helps us stand out a little bit because the larger institutions are about the dollar signs and our niche is a little bit more, where those bigger lenders won't touch them. And it really helps us kind of stand out and we're a little bit different where we actually feel like we're helping someone.
Good. Good. And anybody else? And I just have to, I want to point out, Gil keeps score. So every month he tells us how we're doing, And but I want to say Leslie has been the key person to all of our technology advances, and they've been tremendous. And it's not all seen how much we invest every year into technology. And for instance, we did our Lending 360 upgrade. The same people are able to do more because it's so much more efficient, and people are able to, for instance, if you misplace your credit card, which I do, now you can just, and a lot of members don't know this, now you can just turn it off. You don't have to say, gee, I lost my credit card, will you close it and then send me a new one that I'm going to get in the mail at some point. You can actually just, on your phone, turn it off, and no one else can use it. When you go home and you realize that you left it on the kitchen counter, you can just turn it back on, and you're good. So control, security, communication, ability to do services remotely, and we always like seeing everybody. So if you come in, that's great, because we like that atmosphere.
Yeah, I want to add, we can't do all the things we do without the team that we have and the members we have. Without our members, we wouldn't be here, and without the team that we have, we wouldn't be able to do this stuff. So, I mean, it's not just one person, it's all of us working very hard every day. We've got Vegas, we've got Phoenix. Phoenix is kicking it out of the park right now in their loans, their development. John in Mill Street branch, Phoenix and Mill Street are like neck and neck, so it's a friendly competition, and it's a great team that we're a part of. So I just thought I'd throw that in there.
And in fact, why is that part of what we do is we don't have a lot of turnover.
Sorry, St. Mary's too. I forgot Claudia. Sorry, St. Sue. You're rocking it too.
You'll pay for that. No, and I want to add in, we talk about it during our final comments, but we run an institution with a $150 million institution without a lot of people, and we do that by having a team that's very tight knit, and we don't have a lot of turnover. So it's important that people like their jobs, like what they're doing, and we like our members to know that the people there know them, and there's a lot. We really do know most of our members personally, and it makes it a little bit different atmospheres. So,
Jim, I just need to jump in because I got to give the nominating committee.
Oh, that's right.
Report. And it's anticlimactic after all of that. I'm sorry about that, everybody. There is a formal letter on nominations to fill the board seats that are up this year. I'm not going to read that. The board is comprised of 9 members. Each has a term of 3 years. We definitely appreciate the staff and their assistance in helping us keep from going afoul of any of the complex regulations and laws that apply to the credit union, and they're very helpful, and we always appreciate that. We're very pleased about the healthy growth that we've seen. So every year, 3 board seats come up, and a nominating committee is chosen. This year, the nominating committee was Bruce Harvey, Chris Bradfute, and myself. I was elected as chair of the committee. We did notifications. We had 2 incumbents, Nan Boyer and John Nunn, who agreed to continue on the board. And the 3rd incumbent, Rich Malillo, bless his heart, who served on the board for over 35 years and has been awesome, served as secretary for much of that time. He declined this year, so we appreciate Rich and his wonderful contribution to the credit union. So we opened it up for any members who were interested, set a cutoff date passed, and on and off we've mentioned Mr. Michael Barnes, sitting here to my left, as a possible candidate for the board of directors. I'm just going to give just a little bit about Michael, and then maybe you can give a little bit about yourself if you would. But Michael is a graduate from UNR, got a degree in civil engineering. He's into construction and development, correct? He did a lot of work out there in Wingfield, as I recall, and now is developing Heinz Ranch. So Michael has been nominated. The three nominees, which are again Michael Barnes, Bruce Harvey, and Nan Boyer and John Nunn, have been approved by the board. So we appreciate all of them being willing to serve for another term of 3 years. Now, Michael, I'm going to give you just a moment, if you would, to tell us a little bit about yourself and introduce yourself to the members.
Sure, I appreciate that very much. Michael Barnes, I've been a resident of the Orignal area for about 45 years. As you mentioned, I attended the University of Nevada, Reno, obtained a degree in civil engineering. I have a background in construction management. I'm a licensed general engineering contractor, but I got into land development quite a few years ago with some big projects. Wingfield Springs was one of my first. Copper Canyon was another. Currently, I'm involved in a project called Stonegate. It's the largest master plan community, general manager and member partner in that project, and another project up the Mount Rose Highway called the Sente Project. So I'm very excited, very active in all of the it takes to get projects approved, and very much love Reno. I have a wonderful wife, Ann. I've been married for 38 years, and I have a son who's 27. He's living here now and working towards a graduate degree. So we're very excited to continue to work here, and I was very pleased in accepting the position here. I appreciate you guys offering me that. So I have a lot to learn. I do not have a background in banking, but I'm learning.
Well, we appreciate you being willing to serve and all that you'll bring to the board. And he's already brought some wonderful ideas and comments in our meetings, so we appreciate him. So we're going to be honoring Rich Malolo in the future. He will remain as an emeritus board member. And so I think we're loaded and ready to go, and hopefully we can get over the COVID issues. Although this year has been a pretty good year overall still in 2020. So with that, I'm done with the nominating committee report, and I'll turn it back to, I guess, Jim.
Yeah, that's it. Doug, do you have any closing?
Well, I kind of briefly said at the beginning of the meeting that I'm honored to be serving on a board with a bunch of wonderful fellow board members, and to be working with such a wonderful staff for the credit union. It's always it's kind of a challenge, like Michael was saying. I've been on the board for quite a while, but there's always new things I'm learning about the financial industry, and you're in good hands as members with the staff that Jim and his folks have together. They take care of you, take care of the communities that we serve, and hopefully offer a good product for a long time in the future. So I'm proud to be a part of the credit union.
We're very happy. I will say we have a really engaged board, and when we have federal examiners coming in, they're always pretty amazed by how in-depth our board is and the quality of our board members. Which I'm trying to say, Matt, you were not at the annual meeting last year.
I was not.
So we really should introduce you also, Matt. And you are vice president.
Vice Chair.
Yeah, no, I know, vice chair, but
Director.
with Southwest Gas,
Director of Operations.
director of operations for Southwest Gas. So now the winter's coming, Matt will keep us all warm. So and we're very, Doug knew Matt from down in your.
We go along with
Southwest
that.
Gas headquarters.
Yeah.
And really appreciate Matt stepping up and serving, and I think it's the board and really the quality of the board that helps move this institution forward. And I know when we merged with Southwest Gas, Michael and I had lunch, and I mentioned that it was kind of up in the air, and Michael and I have known each other for a long time. He said, "You know what the hell? Just you should do it."
It was more depth than that.
Yeah. Yeah, we were talking a little bit more, but it was close. It was big expansion just regionally for us. But when just on behalf of staff, I wanted to thank the board, your volunteers, and it's you help keep everything on track. So that are they, Katie.
Do we have any questions that came in?
If you have any questions, go ahead and put them in the Zoom chat there or in the YouTube comments if you're watching on YouTube. We had one member submit a question beforehand wondering about the plans for the future of mobile banking, what we have coming in the pipeline. Specifically, he wants to know about Zelle and payment platforms that might be in the pipeline there. If anybody wants to address that question. What do we have coming in technology, online banking, any of that?
I can talk about Zelle, if you want me to.
Sure.
So, we're always looking at products and services that we can roll out to the membership. Zelle is a very expensive product, and one of the best things about Sierra Pacific Credit Union is we don't charge for anything. So to continue adding products and services, we have to make income to support those things. So we are looking at Zelle. We do have a payment or person-to-person option through bill pay currently. Functions similar to Zelle. There are different products out there. But at this time, we just aren't ready to move. So it's on the 2021 table to review a little bit more. But for this year, it's not going to happen. Other developments in IT. It's constantly changing. So currently, we're internally going through a huge overtaking of our internal networking. So that's kind of the focus right now. Members won't necessarily see any benefit from that, but we have to do it. Our security is the number one priority for the credit union, and we will make sure that happens. So if there's things that people want, it's really important that we get that feedback. So the question about Zelle, we haven't had many people ask about Zelle. We've had like maybe 2 or 3 people, so we don't hear about it from the membership. We don't know you want it. So anytime you see something you think you're going to use, please let us know. On the website, there's comments sections. So yeah, any feedback is great.
Great, thank you.
Yeah, and I want to just reiterate, we do literally take that very seriously. That's how we got remote deposit, and it wasn't that it wasn't on the list, but we had a couple of members down in Las Vegas say, "Do you know what it's like to have to drive across town to deposit a $200 check? It's going to take me hours maybe to get over to the credit union. We really need it. We really like it." And kind of thought, yeah, that's a different than South Reno. And so it was kind of obvious for the future we had to do that. And what was an item on a list went to the top of the list really after we started talking about it. And it was based upon, as I recall, two members mentioning it very stridently.
I it was only 2, but but yes.
There were more strikes.
There was some interest in that, yes. And we definitely, I mean, we're trying to keep up, with everything out there, but technology is very expensive. And the way we make our money is through loans and investments. We don't fee you guys, and that's one thing I think people forget about is we're not a high fee institution. We don't have that non-interest income.
Okay, thank you. Don't have any more questions coming in, but we have one built out that we've had some questions about in the past, which is, Jim, can you walk us through a little bit what's going on with dividends and how we can expect those to change down the line here?
Well, obviously dividends have gone down, and that's really, and Gilda talked about also the yield on savings. And I want to say really globally, but the United States have plummeted. And part of that was due to Fed actions, simply saying we're going to keep rates low for 3 years or more. And that has really, from our investment side, we invest a lot in guaranteed paper, very, very safe investment vehicles. And that's if the government suppresses rates, which they have been doing, and they say that they intend to do to help recover from COVID. That's just part of life. We try to keep our rates at or above most other institutions. We've been doing that for a long time. But we are looking for them to go up, but it's somewhat dependent upon what happens in the rest of the world. And we don't want to attract too much deposits, which seems odd, but they can't do anything with it other than put it into very, very low yield instruments. You want to have it balanced out so you can lend some and invest some, but our primary job is to put credit out to the community. We did reinstitute rates on checking accounts. We did here. We had just about zero amount, so we put rates or we put dividends back on.
And let's just go into one more. What is the credit union doing to ensure there's a safe and sound institution for members as we go through some volatile economic stuff?
We're playing the lottery.
We can probably all talk about that, but Gil, do you want to talk about it?
Yeah, I think obviously the net worth ratio, I think that's a very important ratio when you look at institutions. And as you saw, ours is around 12%. So essentially that's our capital divided by our total assets. So that's a key metric of determining how well you're well capitalized for an institution. And so I kind of did a rough estimate. The NCUA says a well-capitalized institution has to be above 7%. So for our institution, we would have to lose roughly about $7 million in bad loans to be below that 7%. So needless to say, we're a pretty strong institution and your money is definitely safe. So.
And once we also, we tend to not engage in the subprime loans. So we very much, Megan and her team looks out for who we lend money to. And it's not perfect, but for instance, our delinquencies and our charge-offs are below what our peers are, which is why we watch those things like a hawk. Is where we take care of what we do, and we don't do risky things. So we try to keep our financial structure very, very safe, and we don't do risky things.
I play the lottery.
She's joking, by the way.
Bam, you can't tell because my mask is.
All right, and one last one roll off of that. What is the credit union doing to help members and the community that are impacted by COVID and related issues? What are we doing to help members who are impacted by COVID shutdowns and unemployment?
Do you want to talk about the forbearance, Megan, on loans
Sure.
that we did?
We've been allowed to let members skip as many as 6 payments. And then from there, if there's still a need, we can work out, adding payments onto the end of the loan, re-amortizing it, adjusting your payments. We've been waiving fees for a number of services that we do charge for, which is very minimal. And we actually have been very lucky that we haven't had a lot of requests really for the skip pays past the 6 months. So I'm not sure if that's, people are finally coming back into it, but we've been pretty good. But we've had a lot of the steady rush in the beginning, I think, of uncertainty. But we launched a form on our website that was very easy to do to allow people to skip payments as needed.
Great. All right, and we don't have any other questions coming in. Is there any last points we want to touch on before we say goodnight?
We can unmute everybody. How's that?
Yeah, there we go.
You can all speak maybe now if you want to. You must touch your phone or whatever you're on. Okay, nobody wants to be unmuted but Gordon and Big John. And you guys are a tough
Hey,
crowd.
Gordon, how about you first?
After you, babe.
I didn't get that, I'm sorry.
No, we just thought that you were unmuted. So, good. Well, everybody, I want to thank you for joining us. And again, this went, I think, hopefully pretty smoothly. But we really hope next year we're going to have our normal annual meeting and our member meetings down in Las Vegas and the Phoenix, because I think people enjoy getting together, and we all see how much everyone misses that. So thanks everybody, and thanks to the staff that we can see are signed in, and thank you for being members. It makes the job worthwhile.
All right. Thank you.